The Cogito Alpha fund has delivered an annualized return of 16.43% over the last 2 years versus 14.91% for its benchmark, the Swix All Share index. In January alone, the fund returned 8.47% on the back of strong performances from the likes of Sparku, Advitech and Investec. So will it continue? Fund manager Anthony Durham joins us in studio to discuss, and you certainly hope it's going to continue, don't you?
Absolutely. We've got some exciting stocks in the portfolio. And we think that as the economy improves, we will get strong pricing power and volume growth, and that will translate through an operating leverage effect into strong earnings growth and performance.
Anthony, just to talk about that performance, I mean 8.43%, I'm just intrigued to find out, is that the biggest 1 month return that the fund has delivered, or have there been bigger ones than that? Because that's a big number.
Yeah, it's a big number. It's the second biggest. I think we've done slightly more than that in 2 years ago, in December 2 years ago.
You mentioned just broadly, we wanted, before we jump into the stock picks and your portfolio holdings, we wanted to just ask you, you alluded to an improving economy in your opening remarks there. I just wanted to find out what you're sort of seeing at the macro level.
Well, it's our thesis that the US took us into this financial crisis, and it'll be the US that pulls us out. You're starting to see a pickup in housing there. You're starting to see a big kind of dividend from much lower energy costs. You're starting to see the effects of very low interest rates and lots of liquidity washing around in asset prices. That improves consumer confidence. So we think that growth in the US will pick up certainly in the second 6 months of this year, and that will kind of buoy equity markets around the world, including ours.
I want to pick up on those three stocks that have led your performance higher. Investec. Where do we stand with Investec at the moment? Because there's been a lot of debate about the stock and where we're going to see this one trading down the line.
I think Investec's been a beneficiary of the risk-on trade in the last 5 months. It's part of a group of shares in European banks that have done well. I think longer term, this is a company that's very geared towards a pickup in capital market activities, pickup in property prices, writing back of provisions that they've made against possibly doubtful loans they've made in the property portfolio. I think it's got a fantastic asset management business that's a beneficiary of all this global liquidity. It's got a global franchise, a global brand. It's got a suite of products that on average perform quite well. I think it's a good franchise. Compared to the rest of the local banks, it trades on roughly half its price to book, or half the price to book of, for example, FirstRand. So I think there's great value there. It's done quite well in the last 4 months, but I think there's probably maybe 20% upside in terms of the valuation from this level. But I would expect to pull back. It's run exceptionally hard.
Anthony, it's also a great share that for a long while in the early part of last decade earned a lot of its profits from private banking, and while they called it private banking, there was a lot of sort of private client merchant banking, investment banking and specialized property funding that was taking place there. Any sign of those improving in the three geographies they operated?
Yeah, I think the credit extension numbers are out today, and Investec certainly had the highest amount of credit extended over the period reported. And that's quite encouraging. You're starting to see, certainly around the Sandton CBD, you're starting to see building activity pick up. You're starting to see the green shoots of more kind of activity in the kind of
I haven't heard
economy.
that term green shoots for a long time. I'm sure we'll start speaking a lot of green shoots going forward, given the traction that you say we're seeing in the US housing market.
Absolutely, and I think if you're looking for a pickup in property valuations in the UK and Ireland, possibly Australia, you could play very few counters in our market. But Investec, if you go on to think about it, as a geared play on improving general property market around the world.
You talk about the asset management business, which is phenomenal. It's a proper globally entrenched business. They've now got distribution centers in Hong Kong and South America and all over the place. But the capital markets division has been struggling a little bit. We hear about the sort of I guess right sizing of the capital markets sell side research and trading abilities. They've made some mistakes in the past. Do you think they can get this right in the UK, which is a very hard market, not only from the macro perspective, but also from a competitive landscape point of view to compete in?
Yeah, if it was up to me, I would close down the capital markets business or make it seriously smaller. I mean, I think the key business is around asset management and their private bank. But I think, Investec share price has underperformed for about 8 years now. It's gone nowhere. One of the reasons that it hasn't performed well is that it was undercapitalized relative, to Basel III requirements. Now those are kind of been paid back and extended, so it's less capital constrained than it was. And I think that's possibly also a reason why the company's re-rated in the last 3 or 4 months.
You also highlighted Sapaku as one of the stocks with regard to your good performance. This is a company in the industrial space. Often when we look at PPC, we've always come to that argument that Sapaku is a competitor, is going to shake up the cement industry. Is that what is happening here?
Absolutely. This is a hugely exciting event. For the first time in about 35 years, we're getting new cement capacity being developed in South Africa. They're going into production November this year. They should produce at full steady state about 2.5 million tons a year in a total market of about 16.5 million tons. The thesis is that their plants are much newer, therefore much less costly to run, much more efficient in terms of energy. They've got quite a clever way of doing their logistics between Delmas and Lichtenburg, where the plant is. And I think that as building activity picks up, we'll go from an oversupplied market to an undersupplied market in the next 2 or 3 years. And I think the margins
Sapaku is going to be well positioned to take advantage.
Very well positioned indeed. So we're very excited about the medium to longer term prospects of Sapaku. We think there's much more upside in the share price.
With this capex, have they talked much about potentially exporting into Africa? Because we've seen some consolidation taking place in Nigeria. With just escapes me now, the cement producer there.
Dangote Cement.
Dangote Cement, sorry. Is there an opportunity? Are they kind of talking about opportunities to export?
You can't rail.
Very much South African story?
Cement is very heavy. It's very costly to move around. So you want to produce it where it's really used. Their focus is going to be primarily on the Gauteng market. They are developing another facility up in Limpopo, and they'll possibly be able to export into the sub-region. But really to export cement from the reef, Gauteng, up into West Africa is just not a viable proposition.
Anglo American today announcing that they're upping their dividend by 15%. Cynthia Carroll wanting to leave on a high note.
Yeah, and I think that Anglo is, there's a litany of woe around the Anglo share price. There's lots of kind of intrinsic value. One would think that as they start to deal with problem children in the portfolio, you'll start to see a re-rating in the share price.
Have you been holding the stock for a long time?
We have. I'm starting to get a little bit tired of holding it, so we're paring down the position.
I noticed that frown when I went to Anglo American. I'm sorry to ruin your day. I thought you'd be happy about the dividend.
No, we're happy with the dividend. We'd be much more happy if we had some kind of clarity on, around the issues around Minas Rios, about Amplats. There's lots of issues, lots of kind of noise around Anglo. So.
Do you think Mark Kutivani is going to come up with some silver bullets for Anglo-American shareholders in particular?
Maybe for Cynthia Carroll, perhaps. No.
Very annoyed shareholder we have on the desk. Maybe we should move on from Anglo-American quickly. Yeah. Warren, throw it forward to another stock.
I think we just we should just throw it forward. Anthony, we attended the results presentation for Pan African. I'm just checking your list of shares that you own here in terms of resources. Pan African, we've got Anglo-American. And we've got another little gold company called Village Main Reef.
And we've got Exara as well.
And Exara. So
Pan African, Pan African is a stock that we've done very well out of over the last 3 or 4 years. We think we started buying it at about 67, 70 cents.
Now R2.50.
R2.50. So here's a company that's kind of issued 25% more shares, is doubling its gold production with the purchase of Evander. It's going to double its platinum group metals production at Phoenix to 50,000 ounces. They should be able to generate 250,000 ounces, producing gold at 230,000 rand a kilogram, selling at about 450,000. So the margins are very wide. It's cheap, one of the cheapest gold mines in the world, trading on just over 10 times earnings. I think it'll do 25 cents for the full year in earnings. It really, if you've got a view that the rand should weaken and gold price should stay firm to go higher, I think this is the best way to play a higher rand gold price.
Anthony, the acquisition, the Evander acquisition is a big one, and I see it's just gone through, so they formally own the Evander gold mine now. But does it make you worried when you see CEOs making a fairly big acquisition by their standards? with this purchase of Evander?
Sure, it's a game-changing acquisition for them. It increases the operational risk, but de-risks the overall operation. Now they've got 2 mines, 2 resources. So I think overall, net same amount of risk, but much more upside.
We seldom get the opportunity to focus on the fat tail in the market, and I see a number of stocks here that fall into that space. Something like Rolf's. I know you've spoken to me about it. It's in the industrial space, is that correct?
Absolutely. This is a very exciting little company. 40%.
See, I'm hoping to unlock the 10 baggers of the future. That's why we've got to delve into these stocks.
This is a company we bought at 80 cents and it's trading at about 5 Rand now. Well, first started buying at 80 cents, so it's almost a 10 bagger for us. We'll be at around about 10 bucks a share, I guess. So.
And you sound as though you're confident it's going there.
Yeah, I think it's 40% owned by a guy called Arnold Fourie, who owns Pinnacle Technologies. He's mastered the art of buying well and integrating acquisitions. I think they're going to try and do exactly the same thing with Rolf's. It's buying out chemical distribution businesses, specifically now in mining and water treatment chemicals. They're building a distribution hub into Africa, so this is a very exciting business that can scale up very rapidly with some clever acquisitions. They bought a company called AgChem on 3 times earnings. They've integrated it well. It's producing about 30% of operating profit at the moment. It's just a very, very good story indeed. It's not cheap, but I think relative to the growth prospects, it looks very exciting.
Just to clarify, Anthony, it's called Rolf's Technology Holdings, but it's got nothing to do with technology, does it?
No.
What does this company do?
It does pigments manufacture, chemicals distribution, and specifically this AgChem does agricultural chemicals, which is pesticides, herbicides, and that kind of stuff. So growth stimulants. So it's it's got a great kind of African growth. If you like agriculture in Africa, if you like mining in Africa, this is a great way to play.
Did you play Pinnacle correctly?
Yeah, we own it. We sold it too soon, unfortunately. But we thought what we did is we had exposure to Rolf's and we upped our exposure to Rolf's. So we're getting the same kind of management, same philosophy, same intrinsic ability to buy and integrate well in a distribution business that's kind of almost infinitely scalable.